I'm Charlotte McLeod with the Investing News Network, and here today with me is David Morgan, publisher of the Morgan Report. Thanks so much for being here today.
Charlotte, it's always fun with you. Thank you.
Yes, and it's our first time talking this year, so let's start off with a short recap of 2019. Were you happy with silver's performance last year?
I was happy it was up, but it was probably the laggard between the metals. I think it outperformed platinum, but it certainly didn't outperform gold or palladium. But anytime it's a gain, I'm happy. What I really want to emphasize, though, is that the miners did exceptionally well. Our top tier performance last year averaged 63% gain, and the S&P did 29%. The best performing asset class in the S&P 500 were the miners, but no one tells you that in the mainstream financial media. They don't want you to know that. So we did quite well in the stocks. My top pick for the top tier was 100% gain, and it's a silver stock. In fact, it's one of the most well-known silver stocks. And so if silver had gone last year from whatever it did, 15 to 30 and doubled, the same as the stock did, there'd be a lot of happy silver investors. But as you know, that's not what it did. But it did did okay, gained $2.
And when you say the miners, you do mean specifically mining companies, not the exploration or development?
Right, well, I divide the Morgan Report into top tier, which is producers, streamers, that type of thing. Then I've got the mid tiers, which are usually producing but have a lot of upside in exploration. And then I do speculations like the whole industry.
Yeah.
And we have several picks in there. But no, specifically I'm talking about the top tier. Yeah.
Okay. So we're only a few weeks into 2020. It's already been an interesting year for the precious metals. We've had some different activity than we usually see. So what would you say is the next key price level for silver? We had gold just above 1,600. Palladium is making its major gains. Yeah.
Well, I'm going to say gold first, and I will answer your question on silver. But so we needed to break it up 1,350 gold. I said that many times last year. We did. We got to about the 1,550 level or a little higher. And that looks like it's becoming the new base for gold, which is excellent. And then what that means for silver is we really need to get above 20. I mean, I look at this market for this year, I think we're going to see at least a 20% gain in gold, which puts it on maybe the 1,800 level. And I'd like to see a 30% gain in silver this year, which would put it over 20. And if those two were accomplished, I think not only does it verify we're back in a bull market, which I'm convinced we are, but the bull market, has got some steam, is going to continue, but not excessively. We're not going to see, in my view, excessive moves in these metals, probably until 2022, 2021, latter part of it. But we will see, in my view, studied one, substantial gains in gold. I mean, this idea of $3,000 or $5,000 gold sounds preposterous, especially the layman, but I do think we will achieve those type of levels. I don't think we're going to get there and sustain them, but I do think we're going to see multiples from where we are right now over the next few years.
Okay, like a post-2022.
Yeah, I think 2022, 2023, 2024, I really don't know. I mean, I've missed my forecast a couple times. I've called the peak. I called the peak in 2011 for silver. And I had a lot of people that were unhappy until some of them cashed out and were pretty happy that they did. So.
Okay, and where would you see platinum and palladium in there? They also have some...
Yeah, I'm favorable to platinum right now. Palladium, I called perfectly at the bottom and recommended it way above platinum. I said, if you're going to put in the other white metal, pick palladium. Unfortunately, I was a little too anxious to take profits. But you never go broke taking a profit, that's an excuse. But no, it's done exceedingly well. I sold it a year early. I sold it in January last year. I should, this January, it's doubled from then. And I didn't expect that. Usually it peaks in January. I used to trade palladium almost every January. But anyways, having said that, I wouldn't get into palladium right now. And platinum can substitute for palladium, even though that's, again, you don't hear that. And actually what you hear is the opposite, that, platinum is used for diesel catalytic converters and palladium is used for gasoline catalytic converters. That's true, but they are interchangeable. In fact, the reason that palladium went to $1,100 an ounce in the early 2000s was that Ford Motor Company changed their catalytic converters from platinum to palladium because palladium was so much cheaper than platinum at the time.
How easy is it to make that switch?
It's not.
Yeah.
It's very costly, very time consuming. They have to shut down the line basically. And so there's all those costs that you got to attribute to the bottom line. Is it worth it? Isn't it worth it? At the time, Ford thought it was until they realized how small the palladium market is.
Right.
And they disrupted the market in a big, big way. And then, you know the rest of the story.
Yeah. So we've been talking about these interesting price movements. What would you say is behind that? I was going to ask specifically for silver, but we can talk about the precious metals as a whole if you want.
Well, for gold, it's safe haven status and bank buying. More and more, institutions to individual investors are realizing, there is more chaos in government and uncertainty, and that drives the price of gold. It's really more than inflation. It's more about uncertainty. And of course, that spills over to silver, but not nearly like it used to because crypto's really interfered, but crypto's been an alternative to the silver market. A lot of people that were in the silver market now find that they're in the crypto market and they like it better for a number of reasons.
Right, and the safe haven status that's been driven, at least in the first few weeks of this year, by some very concerning things going on with the US and Iran. Do you see that type of thing continuing to drive it, or should we be looking, like that seemed like an event that came out of nowhere, or should we be looking more at the underlying safe haven status of the metals?
I think both. I think one is, the safe haven that we just mentioned. And Charlotte, I think you also have to pay attention to what the moves are when there's, cyber attack, unknown event, political rhetoric, this things that are going on that we don't see much in the States, like the yellow vest movement hasn't really gone away. There's disgruntled UK people that are going to Brexit. Will that spill over? Does Italy and France and Germany eventually leave the EU? There's a lot going on. So keeping your eye on those geopolitical situations and how gold and silver, especially gold, react to it does portend kind of where those market's going to go eventually.
And it is an election year in the U.S. Right. Does that affect the precious metals?
I think it can, yeah.
Okay. So for investors who are looking at everything that's going on and they want to get into precious metals investing, what's the best approach for them to take in this environment?
Well, I'm going to be very strong with the answer. First of all, you must have some precious metals. Anyone that is an investor must have some. I think the best place to start if you don't have any is just jump in, realize the price could go up, the price could go down, and the price could go, steady in a trading range near where you bought it. But once you've accomplished that and you're more inclined to go with the flow and, the mainstream investment advice, then just take a minimum position and leave it alone and sleep at night and everything's good. And that's really all most investors need. If you want to get more aggressive in the market, there's opportunities in the resource sector, throughout the resource sector, not just in the gold and silver, but there's all kinds of exotic metals and there's resources. I mean, excuse my digression, but the Northwest Mining Association has a saying: if it can't be grown, it has to be mined. And most people are not mindful of how much we get from Mother Earth that we take for granted. The cell phone, the computer, a bicycle, an automobile, anything that has metal in it, which is almost everything we touch every day, comes because we have mining. So it's important.
Right, and as a final question, I was going to ask you what other non-precious metals opportunities you might highlight for investors this year.
Well, I'm real big on speculation in the e-waste sector that replaces cyanide. It's been something I've been basically talking about to my paid members for a couple of years. Mm-hmm. I think it's a $20 stock 4 or 5 years out, and it's like 1/20th of that price right now. I don't see anyone in graphene or graphite at the show. That I might have missed it. That's an area that's pretty interesting. There's a lot of these exotics that are important. Rare earth elements are coming back into the fore because they are extremely important in high-tech applications. I'm becoming more friendly toward the base metals. My premise is that as the economy contracts, it doesn't expand, but the money supply does expand, that the precious metals are your best place to be safe haven-wise. But there's always new technology. There's always inventive people. There's always a twist to what we've already accomplished. So I try to stay very open-minded. There's nothing in particular that comes to mind right now. But the battery metals, I think there's going to be a lot of innovation in that area over the next 10 years. I can't look you in the eye and say, Charlotte, you got to buy iridium because that's the one. I don't know, but I am studying it.
Yeah, and you mentioned a lot of tech connections to mining. Do you think that's something that the industry needs to think about more?
Absolutely. I really believe that over the next decade, you're going to see where, you're going to see a big dislocation of people that make a living mining. It's going to be robotics. It's going to be robots that are going to go in there and they're going to do the mining. No, you'll still have geos and mining engineers and, CEO and all that, but you'll see a big shrinkage in the labor force. And it's not just mining. It's going to be truck drivers. It's going to be, look at what Amazon does with their warehouses. How many people in there now relative to a decade ago? So there's going to be a huge dislocation and displacement over the next decade, far greater than the last, which was very significant. So this whole idea of basic income or whatever, those ideas are becoming to the fore more and more because they're just, in my view, there won't be enough jobs for the populace at large. As an Austrian, I'm not supposed to say that. I'm supposed to say that the market will always find, something, but I'm not so convinced that they will.
Is that a good thing for the miners, or it sounds like they're going to have to adapt?
Well, it depends what part of the miners you're on. I mean, if you're a U.S.-based miner and you can't really compete with somebody mining in China or Mexico, but with a machine you can get your cost down that's equivalent to what they pay their labor force, that's a good thing. Because now you're competitive and you're basically on an equal playing field. If you're a miner and you make a living at it, you're not going to be very happy.
Okay, sounds like we could have a big kind of paradigm shift coming. So we'll leave it there. We've given people something to think about. Thanks so much. Once again, I'm Charlotte McLeod with the Investing News Network, and this is David Morgan of the Morgan Report.